With the Ellis team at RE/MAX, it's a family affair. Always call the Ellis team, they'll handle you with care.
Welcome to the Future of Real Estate. I'm Brett Ellis of the Ellis team at RE/MAX Realty Group, and it's that time of year again where we're ready for our July Southwest Florida real estate update. So I want to share with you a couple trends that we see going on, and this is kind of an important trend, so you might want to take a look at this. Now, each week we write an article for the Fort Myers News Press, and the last 2 weeks I've written some nice information that I want to bring to you now on video. Each year, or at least the last 2-3 years, I've been noticing a trend. Our prices have been peaking. They've been kind of going up in season and peaking around May, and then holding steady or falling back. Then the next year, they've been peaking in season, right here, holding steady and then falling back. And then the next year, they've been peaking about May, steady and falling back. And then we're up to I think about the fourth year here. They peaked from January till April, and I've been telling people we're gonna have to watch the May and June data. Well, the May data is in, and our April was 182 median price. Our May data was down to 176,333. So the cycle is repeating itself. So sellers have been kind of hearing about how wonderful the market is and how they can price above the market and all that things. And I've been telling people, hold on, wait a minute here. I'm seeing some trends here that the appreciation may have already occurred, and we may be settling back into a historic pattern here where the prices settle in and kind of go down a little bit. So that's one variable we need to keep our eye on. Another variable, while I'm at this, let me share with you about listing inventory, because the listing inventory kind of falls and then it goes back up in January and then falls, and right now we're down to 5,200. So our inventory is very low. That is actually good news for sellers. Prices may have peaked and be heading down a little bit, or at least holding steady, but inventory is down, and if you're at that lower end of the market, you're golden right now. So you don't have to really do anything. But I want to share with you the next article I wrote for the News Press. Another thing to keep in mind, because keep in mind, the market has a lot of variables going on and they're always changing. You've got the economy, you've got oil prices, you've got elections, you've got job situation, and we just got some good news. You know, Hertz is one of the Fortune 500 companies that's moving into Southwest Florida. That will add renters and it will add some buyers to the market. So that doesn't hurt, it kind of helps. It doesn't help with inventory, but it helps with buyers and getting income into the local community. And then we had another company decide they're going to relocate here as well. So that's all good news. But here's what's going on the national front that you might want to look at too. Interest rates in the last 7 weeks have gone up over 1%. And this is going to impact buyers, and it could impact sellers, and I want to share with you why. So we kind of came up with this graph here. Let's see if we can get it on screen for you. Maybe I'll make this a little bit bigger so you can kind of see. All right, so back in May of 2013, interest rates were at 3.6% right here. In 7 short weeks, they're up to 4.625%, so a little over a 1% price change. Okay, so the income needed to qualify, you need for a $200,000 home, I'm assuming the minimum amount down is, back then it was $51,765, but now you need $56,358. So an additional $4,500 in income just to qualify for the same mortgage 7 short weeks ago. Now I ask you this, has your income gone up $4,600? Did you get that pay raise from your boss? Well, the answer is, for most people, no, they have not. So basically, your payment will go up $114 and you'll need to make more money to qualify for the same loan. Now maybe you qualified for more than that. It's still going to cost you $114 more per month, and nothing has changed. The price is the same and everything. Now our prices have been going up, and again, we just talked about they may stagnate here for the next several months until next season, but you know, nothing has changed but the interest rate. Now let's look at this. I kept the income needed to qualify at $51,765, the same as 7 weeks ago. You now only qualify for a $180,000 home because your payment stays about the same, within $1 is what I got it to. So that's a reduction, a 10% reduction in purchasing power. So buyers, we've been telling you for the last couple months, if you're thinking about buying, or your lease is about up and you qualify for mortgage, you really need to buy now because our prices have been going up. And even if prices stagnate, don't go up anymore. I think at the lower end they're going to. At the higher end and mid end, maybe not till next season. But even if prices stay the same, interest rates are going up. The Fed has said that they're looking at easing their quantitative easing. So that means the bond market's going to move, the stock market's going to move, and mortgage rates will go up. They've already been going up because of this one issue. So if you wait, we expect this 4.625% to go even higher. It will cost you. You're either going to pay more for the same loan, for the same house, or you're going to have to scale back and buy less house. And the sad thing about that is once you start seeing homes in a certain price range, and then someone tells you, oh, by the way, your payment's going to stay the same, but you got to get less house now, that doesn't look as appealing, and you kind of get soured on the deal. Because it's like, boy, I was going to get a 4-bedroom home and now I can only get a 3, or I was going to get a pool and now I can't afford a pool in this neighborhood, or that sort of thing. So you need to make your move sooner rather than later, or it will cost you. Now sellers, we don't want you to get too greedy here either, because when something affects the buyers, it ultimately can affect you as well. Because let's say you have a $200,000 home, or let's say it's a $500,000 home. There are only so many $500,000 buyers out there. Not everybody can afford a $500,000 home. And when interest rates go up and their purchasing power goes down by 10%, that marginal $500,000 buyer now may only qualify for $450,000. That's a 10% loss in purchasing power. So what you're doing is you're scaling back the price ranges because less people qualify for your home than they did a month or 2 months ago. So this can impact sellers. It's definitely going to impact buyers. A lot of variables at play. We got 2 companies moving here. Hopefully the economy will pick up. Hopefully hiring will pick up. We got some variables. A lot of talk about Obamacare and a lot of companies maybe scaling back full-time employees to part-time employees. I know that Obamacare just said to employers, hey, we know this is a burden on you. We are going to extend the burden on you from 2014 to 2015. So that law won't go into effect for you as an employer for another year. That'll get them past the midterm elections and then, that sort of thing. So we're hoping in the real estate market, our economy can get buoyed up by then, and we're hoping interest rates will kind of settle down. But with the Fed saying they're going to ease quantitative easing, we're not so certain of that. We think if you're a buyer and you're on the fence, you better move now, and if you're a seller, you ought to price your home right, because less and less buyers are going to qualify for your home in the future. If you've got a home priced 100 to 150, it may not matter. Yes, you've got less buyers that are qualified for your home, but there's so many buyers out there and so little inventory, you're probably okay. If you're in that 3, 4, 500,000 and up, you might want to pay attention to this because this could affect you. We're going to keep you updated as to these employee relocations, how they're going, how many people are taking the jobs, how many people are buying versus how many are renting, if we can get that data, and just how it affects the overall market. We'll continue to track the listing inventory, we're going to continue to track interest rates, and we're going to continue to track pricing and all those kinds of things, and we'll report back to you each month. So stay tuned. You've been watching The Future of Real Estate presented by the Ellis team at RE/MAX. Our website is topagent.com. You can search the entire MLS there, or you can read these past articles. Just go to our blog. You can find that at blog.topagent.com. And thanks for tuning in to the Future of Real Estate channel.
With the Ellis team at RE/MAX, it's a family affair. Always call the Ellis team, they'll handle